Welcome to episode 481 of Get Paid for Your Pad. I'm here with my co-host Eric Miller, and today we are talking about Sonder, because Sonder just came out last week with an announcement that they're cutting 20% off their workforce, which is really big news in our industry. Sonder is one of the biggest short-term rental companies in the world. So we're going to dive into that. Eric, have you ever stayed at Sonder?
I have, man. Yeah. I've stayed at a few actually. New Orleans, different parts of the country. And then most recently, a buddy of mine was staying at one of their buildings in downtown San Diego. So got to check them out. And Sonder, it's interesting what they're going through, man. It's interesting to read this update of what's happening with their company. But also, it's kind of a sign of what's happening in just the tech world in general. If you want to consider Sonder a tech company, where there's a lot of layoffs happening, and we're starting to see this, and now it's hitting our industry pretty hard. I don't know. I think it's going to be interesting to see what happens with the big companies, Airbnb and Verbo, but now we're seeing the actual operators and how it's impacting them. And when we give some, let's give some background on what went down with Sonder. Well, actually, let's give some background of who Sonder is real quick, just so everyone who's listening fully understands and what their model is. From what I understand, I know you've been doing some research too. From what I understand, Sonder is now, they have a couple of different models, right? They have the master lease model where they go in and they lease up full apartment buildings and hotels. They rented I think it's a 10-year lease on a hotel in downtown San Diego. A friend of mine built, and they came in and rented out the entire hotel, turned it into a Sonder hotel. So they do master leasing, but now they're also developing, right? They're also buying their own real estate and developing out their own hotels. Am I correct with that one?
Yeah, I'm not 100% sure. I know they master lease buildings. You mentioned one in San Diego. They've signed some pretty big deals in the last couple of years. Yeah, there's a big hotel in Manhattan, in New York. It's called the Flatiron.
Yeah.
Yeah. And they I've never been there, but I know they lease these really big buildings. I don't know that they develop buildings as well.
Yeah, so I'm pretty sure like they have a real estate arm to it, but the biggest part here is like what they do and they were the first in the game. They started off in student housing, which I thought was really interesting. They would sublet out student housing in between session or in between school. And that turned into what they're doing now. And they're kind of leading the way. Every major city around the world that allows short-term rentals, you'll be able to find a Sonder there, or they're working on getting there, right? So they're kind of leading the way of that industry. And this is interesting, man. After COVID, if you remember this, we were talking to like Andrew Kitchell from Lyric and all these bigger companies that were in the master leasing model. And I know in COVID, like we were talking like, hey man, this model is a little scary. Like seeing what happened to Lyric, right? And how they were just over leveraged. And you and I were saying it for 2 years, saying if the market arbitrage only works in a market that's rising, right? And it's like if we're seeing that the market starts to decline, how's that going to affect the companies? Sonder was the only company at that scale that actually stayed in the master leasing model, right? So I remember talking to Andrew and he's like, man, we're going to see how that works out for him. So since then they went public, right?
Yes.
They went public, and then most recently, we just got some news on what happened with their SPAC. So why don't you walk everybody through kind of like what you learned by, and what the latest news on Sonder is.
Yeah. So first of all, Sonder has about 6,000 units, which kind of blows my mind because I remember when we were talking about Sonder a couple of years ago, I think they had like more like 1,500 or so.
Yep.
So they really scaled very, very fast. But like they're in urban markets, right? They're in the big cities. I just looked at the website. Their promise is hotel amenities without hotel formality. So the whole idea is like, we talked about this a lot, where there's a lack of standards amongst Airbnb places, right? That's why you and I want to build FreeWild and have those standards in place. We have a very different markets and different type of standards, but Sonder in my view is kind of like the Marriott for short-term rentals, right? You know exactly what you get. It's urban. It's like they have hotels, they have apartments. But they survived through the COVID pandemic. But I mean, they're losing a lot of money. I just checked out the stock price too. They went public at $10. You know what the shares are trading at now?
No, what's it at?
$1.50.
Oh, really?
Yeah.
Really? When did they go public? How long ago?
That was not so long ago. That was in January.
January. Wow.
Yeah.
Wow. Yeah. So I'm reading here that Sonder reported an $83 million loss in its first quarter, and its expenses ballooned 72% to $176 million. That blows my mind, man. Like, those are some big numbers for a short-term rental company.
Yeah, 100%. Right. And, in my opinion, it just shows that, back in the day, I remember, and Sonder was founded in 2014, by the way.
Mm-hmm.
I remember back then, the margins on this they were huge, right? Like you could rent an apartment and throw it on Airbnb, and you could make such a big margin that, you could rent pretty much anything. And over the years, those margins have been going down, right? I mean,
to that point, when I first got in the rental arbitrage model here in San Diego, I was making 4x what I was renting a property for. So if I was renting the right property, the right area, we were on average making 4x, right? Now it's, where do you think that's at? I mean, we tell students don't touch anything unless you can at a minimum 2x your monthly income, right? But also, and this is some other news that I'm going to announce that I just read shortly that tie into this, but what do you think that's it? Because to your point, I mean, the margins are probably minimal at this point.
Yeah. I mean, it varies from market to market, but in most urban markets, like the rents have gone up so much as well. I mean, in your area, when I was there last year, we were hanging out and we were looking at rents, and rents had gone up so much. I was looking on Zillow, and like a place that would rent for $4,000 was like $2,000 a couple of years ago. Mm-hmm. Right. So, I mean, I think in a lot of places you'd be lucky to get 2x. Like 2x is pretty hard to find these days.
Yep. Yeah. I mean, and we're going to see that continuing to go, right? Like to grow. The rental amounts are starting to go through the roof in every city. Everyone's been talking about this for a couple of years, but I think we're finally feeling it now. Like people are like, all right, this is kind of crazy. It's happening everywhere. And two, with the real estate market, the way that it's going, we're starting to see people buying. They're not buying as much and they're not as aggressive in acquiring. So that means that they're either going to stay put or they're going to continue to rent. They're going to find some new rentals, right? So that means more demand on the rental market. So yeah, I mean, this to me, this just kind of shows how vulnerable the rental arbitrage market is. Again, it made sense in the beginning. We were all making, like, the early days, man, we were making so much freaking money on these units and it was amazing. But now I just don't see it being a valuable market or business model to continue to scale. That's why I think we see a lot more of these companies like Avant Stay moving further and further into the management model, right? Doing like managing at a high level while they're positioning themselves to acquire. And being very, very picky on what they actually lease. So yeah, crazy, man.
Yeah. And I think, there's a couple other factors at play as well, right? It's number one is urban markets haven't recovered as much since COVID. And then I'm also thinking like regulations, that's also a topic in these bigger urban markets where they are like, that might be a challenge for them as well. Just dealing with regulations. Maybe they've had to shut down some units as well because of that.
Yeah, I mean, good point here in San Diego. Again, a friend of mine bought and renovated a old hotel downtown San Diego, and excuse me, they partnered with Sonder. Sonder came in there to lease up the entire building for 10 years, specifically because they had a hotel license in place, and they were able. And San Diego just recently passed their lottery system here, where in the city of San Diego, I think they're limiting short-term rentals to 1%. I think it's 1% of the total housing stock, which is nothing at the end of the day with the amount of travelers that come to San Diego. The hotels just won't be able to keep up with that demand. And it's like 1,000 or 2,000 units of short-term rentals in San Diego, which is crazy. But anyway, the Sonder was getting ready for that. All these big rental arbitrage companies were getting ready for that years ago, because it's been, negotiating with the city of San Diego for a couple of years now, to lease up buildings with hotel permits in place, right? So if you can get a lodging permit, then you are outside of the short-term rental laws, right? So I see them doing that, and I see them really getting ready for the short-term rental regulations. They're spending more money on taking on these bigger buildings. They're signing longer-term leases, the whole thing. So we'll see, man. Like, we'll see how this actually plays out, and we'll see if they actually start shifting their model. But my guess is they're going further into some type of creative structure where it's guaranteed, X amount of guaranteed per month. That's not the full rate, but then also a management model that's there, like a hybrid model, then going into the acquisition side. Because they're at a spot where I don't know how this actually, you probably know this a lot better than I do, how this is actually going to affect a company when you open up at $10 $10, and now you're down at, what would you say, $1.90?
$1.50.
$1.50, right? So how that actually affects them on raising money, because I would assume they have to shift their business model there. But yeah, I think it's really expensive to continue to scale that model for them.
Yeah. Well, here's a funny fact. The founder, Francis Davidson, who you mentioned in 2014, he started a company renting out to students in Canada. Did you know that he bought a $9.2 million mansion in the Hollywood Hills? Did you know that?
Yeah, right after he went public.
Yeah.
Right after he went public, I saw that. He bought it off of Pharrell.
Exactly. Yeah. The rapper. Yeah. So if you're asking like, how does this affect the company? Well, first of all, I mean, Francis has already got his, what's that expression? In Holland, we say to have your sheep on the dry. Like, he's already got his.
I don't know what that means.
In Holland we have a lot of floodings, so it's like,
okay.
So you have your sheep on the dry, so they won't get, they're not going to drown.
Okay.
So it basically means like you're already cashed in.
Yeah. Well, yeah. I mean, listen, when you're in that position, right? Like, I have no idea what his ownership was and is of Sonder, but when you're in that position, like, they raised, what was it, $500 million prior to going public, right? Like, through their series A, B, and I don't know how many series they did before going public. But I don't know how much he owned, but the moment that they go public, I mean, the owners of the company, they get some pretty nice payouts, right? Mm-hmm. They get paid as they should. They built something incredible that the public wants to invest into, and you're able to scale. So you're going to get paid out. You're going to get your cash. You have to put that cash somewhere, right? And that's one thing that I'm learning from, hanging out with, some very wealthy people and learning from them is, like, the moment they get cash, they want to put it into real estate. They want to put it into places to protect it, right? Especially for inflation, what we're going through right now. So, I think for what he created, and I'm sure he got a very nice payout on the fundraisers. I'm sure he got a very nice payout when he went public. we'll see how he responds to that. Like, does a good leader sell your Hollywood Hills property in a time of crisis for your company? Because so walk everybody through the layoffs that's happening, because
Mhm.
I think that's an indicator to watch what's happening in the market at a high level. Like, we got to watch that to see. I think that's an indicator to watch what's happening to the economy as a whole. That's what I'm trying to say. So what's the news on the layoffs and all of that they're going through in Sonder?
Yeah, they're laying off 21% of, let me see, I was just pulling up the article so that I make sure to get the numbers right. 21% of their staff, they're laying off. And I think they have about 700 employees. Let me see.
Wow.
Is that right? Yeah. So it's a big company, man. They raised a 550 million even in June 2020. They were valued at 1.3 billion. So it's a very sizable company. So 21% of corporate roles and 7% of frontline roles they are getting rid of, and also their CTO is being laid off as well. So
Interesting.
pretty significant. This is not. I mean, you're not doing that if things are going well. That's for sure.
That's really interesting. I'm curious why they're letting the CTO go. Because their tech is a big part
Mm-hmm.
of their company, right? And that's what
Yeah.
I was saying. Like, we got to tie him into the tech world and watching what's happening in the tech world right now with all the layoffs. But that's interesting to hear that their CTO is going. So, yeah, man. I mean, listen, at the end of the day, we know from what Tony Robbins talks about, we know that winter is coming, right? And I think this is a good indicator for the economy as a whole, that we're going to start seeing this more and more. Bigger companies like this, we're going to start seeing. I was talking to my buddy about this, who's kind of in the same spot where he was considering going public with his company in Q3, Q4, but now, based on what's happening, they're considering waiting 1 to 2 years, depending on what happens to the market.
Mm-hmm.
And he was saying, like, this is what's going. We had this conversation about a month ago. He's like, this is what you're going to start seeing over and over: is companies that go public are not going to hit the numbers or be able to maintain what they hit when they do go public. And we're going to start seeing a lot of that, followed by a lot of layoffs, right? And then we're going to start seeing, and then it goes into the issue with inflation and cost of living and this whole thing. So to me, this just comes back down to understanding the market and understanding your model, right? And I think the rental arbitrage model as a whole, especially urban markets, are just going to continue to get hit like this, where
Mm-hmm.
I think the short-term rental companies that are focused on management and then doing what we're doing, right? We're going to Mexico here. We leave tomorrow, and we're going to be holding this mastermind. We talk about that here in a second. But I'm going down there with a intention to understand, hey, winter's coming, an economy market correction or crash is going to happen whenever, who knows, but it's happening. We're starting to see the signs for it, right? And real signs, not speculation from years ago when things were actually good. Everyone's like, oh, it's been 12 years. We should have something by now.
Yeah.
Right. Like, that's all we were saying. But now we actually see it. We're seeing companies like this losing their value, laying people off. We're seeing interest rates go up, inflation go up. We're seeing gas go up. We're seeing across the board here in California and most coastal cities, major price reductions in properties. Like, that stuff's coming, right? So how do we position ourselves to actually take advantage of the situation, right? Being able to position yourself to acquire property or to expand or acquire companies, things like that. I think that we're going to have a big opportunity to do that. I saw this in 2008, man. Like, so a lot of people, 2006 and 7, when I was first getting into real estate, they were saying, hey, wait a couple of years, be smart with your money, be conscious with what properties you take on, how much leverage you take on. Big opportunities will be here to capture. So a lot of people ignoring that and continue to go down, essentially the debt route. And then I saw a lot of people position themselves of when the market did crash, they went in and they bought up as much as they can and became extremely wealthy through that. So that's kind of the way I'm looking at this now. It's like, if you're in the rental arbitrage model, it's like, be very, very conscious of what you're taking on, position yourself to take on less debt, and position yourself to be able to acquire some real estate. So crazy times, man. Crazy times.
Yeah, absolutely. And I mean, you mentioned, I mean, we're recording this on the Monday. And I mean, just today, the NASDAQ is down 4%, right? Yep. The NASDAQ is now, I'm just looking at the, from the top. So from the high that we had in November 2019 is now down about 34%. Right. So we're seeing the stock markets really coming down as well. And we're seeing the interest rates go up, right? I mean, if you look at the mortgage rates, they've been going up quite a bit today. I'm looking at the treasuries, the 5-year, the 10-year, the 30-year, they're all going up. So if the central banks are going to continue to raise interest rates, which they are communicating that they are going to do that to reel in inflation, then those interest rates are going to go up, and the affordability of purchasing new real estate is going to get affected, right? So people are not going to be able to pay these sky high prices, as you mentioned. So yeah, man. I mean, it's kind of everywhere right now where like the bubble is kind of bursting. You see cryptocurrencies. I mean, you saw Bitcoin today is absolutely crashing.
It's down. So Bitcoin is down 17%. So it's down. It lost its last 2-year gains.
Yeah.
Which is, obviously crypto is, you have those huge fluctuations with that. But we're seeing the indicators everywhere. Right. So this is a thing. Maybe this is a conversation that we can continue to have on this podcast, and, and because you and I are constantly trying to understand how to position ourselves to handle any situation in our business. We can't be in the mindset that things are always going to be great all the time, right? But you can choose to, and this is why I love that book, Psychology and Money, of like, you can choose not to be emotional with the seasons, and you can choose not to be emotional with your money and the ups and downs, and know that the art of money and economy, it's like, and the science of it is up and down always, right? Mm-hmm. And you have to go, you're on that ride. So being able to position yourself to know, okay, things are changing. They're not changing for the better. They are, without a doubt, for the next 2 years. And it is just a blanket statement for the next 2 years. I think, personally, I think we're going to continue to see this, right? So it's like, okay, if that's the case, how do you actually position yourself to grow in those times in the winter season? How do you position yourselves to find the opportunity in those challenges? Same way that we did when COVID first hit, right? We had the option. It's like, file bankruptcy or go all in and figure this out. Figure out how to, where is the biggest need? Who can we bring the most value to, right? Mm-hmm. And making that decision, it wasn't freaking easy. I mean, we grinded during that period, man. But we could position ourselves to do a couple of different things here. I think for the short-term rental industry, it's like we can position ourselves to acquire short-term rental companies, so assets, and being able to take on listings. And when I talk about companies, I'm talking about management. I'm not going into rental arbitrage. Like, this is something that we're staying completely away from. It's pure debt, and we're just hoping things are going to continue to go up or stay stable. It's too much risk. And then also, how do we position ourselves to bring OPM, other people's money, in to invest that in real estate, right? Because regardless of what happens, people are still going to travel, right? People are still going to want to disconnect. They're going to be able to invest into experiences. I noticed that in 2008, when the market around the world collapsed, we still had people traveling and investing in our short-term rentals for family vacations. COVID biggest short-term rental boom we've ever had, right? So it's like, we know that things can maintain. You just have to invest in the right properties in the right markets and the right people. And we could turn this winter that's definitely coming into a huge blessing for us. So
yeah,
conversation I want to continue to have.
Yeah, I agree. And, just to answer the question of like, how do we position ourselves? I think, as real estate prices are going to come down and interest rates are going up, I think finding investors who have cash, because when there's a crisis, like, cash is king, right? It's going to be harder to get like a mortgage. Some banks might get in trouble. There's going to be like foreclosures perhaps. So like finding investors who have cash to invest, to partner with, to kind of take advantage of the discounts on real estate is one thing. And then on a personal level, I think also like what I always try to do is, don't have your eggs in one basket, because like we know that there's probably going to be a downturn, and we know that markets are always going to go up and down. But it's really hard to predict the timing, right? Like you mentioned, like a lot of people were thinking that, we would have a crisis by 2017 or 18 or 19, right? So it's really hard to predict the timing. So I think it's important to do some sort of scenario analysis where you're saying, okay, well, if this happens, then, then what? And have some assets that perform differently in their different scenarios. Like I know, for example, I think you invested in some silver, for example, right? I do the same. Like I have I invested in some gold miners, so gold mining companies, right? Because I just know.
So you're actually investing in the company.
Yeah. I've invested in some of these companies. Because like gold and silver is something that if the market goes down, especially when there's a lot of inflation, that might actually do really well. Like those assets perform differently under different circumstances, right? So not having everything in real estate or not having everything in the NASDAQ, for example. I have some friends who've invested heavily in the NASDAQ and they've been doing great, but now they're getting killed, right? Or people that invested all their money in crypto, that's the biggest advice that I have, is like diversify, consider different scenarios.
So this is a question I'm having with Samantha and a few my other friends here that own businesses. Is we recognize that throughout the years, as we're getting personal cash coming in, we're investing some of that cash in stocks and bonds and silver and crypto and like all these little things. And we have them set up where our cash comes in, salary comes in, and it just goes right back out to these investments, right? We don't even touch it. We don't think about it. But my question is, and this is something I've been really thinking about, is if you own, in my opinion, the greatest investment you can make is in your own business, right? And knowing that we're coming up to some crazy times, you and I have two businesses, one that's well established and is growing, overnight success, which is, that's going to be interesting to see how the market really affects us, because we're going to have to pivot quite a bit, most likely, to understand what's the next biggest challenge that we have to help other hosts solve, right? So that means we're revisiting the content creation and fulfillment and solving that problem, right? So but we're growing that team. We're investing heavily now into our team. We're going to be investing heavily into ads and investing into that company. Then we have FreeWild, that's a brand new company, has huge potential, right, to generate wealth. As our cash is coming in my opinion, right now, like our greatest investment that we can make is in our own company. If you truly believe in what you're doing, your company you have, and your numbers, your cost to acquire, you're profitable, the whole thing, the greatest investment is investing back into your company, into people, into leads. If you have the ability to put $1 in and get $2 out, right? Mm-hmm. Do you believe, like, is that, because this is the first time that you and I are talking about that, but like, is that, what do we have to go through, and what do investor or business owners have to go through mindset wise to make that shift to say like, hey, this business is the greatest investment. So I'm going to stop doing all these other things and putting it all into this company. Does that make sense?
Yeah.
Because like
Yeah.
I was talking to a group of my friends the other day. We have a finance mastermind once a month. We come together and talk about all these investments. And I realized that no one is talking about investing in their own company. Everyone's talking about investing in Bitcoin and Bitcoin, crypto mining companies and all these things. And I'm like, why aren't we investing in our company? What are your thoughts on that way of, that thought process?
Well, I mean, I think we already are investing quite a bit of money in our company because we're not paying ourselves all of our profits, right? So we're investing pretty heavily into our company. But I think outside of your company, I think you always want to have some diversification with your personal assets, right? Because we don't know, we can't predict the future, right? Like for example, like I have some I invested in a big coffee farm in Colombia, like a few years ago, right? With the idea of like, hey, no matter what happens, everyone want to drink coffee, right? If the economy like takes a nosedive, those assets are probably going to do. They're very stable. They're going to do well in that environment. So no, I 100% agree with you. I think investing in your business, if you have a model that you believe in, and if you're actually profitable, then I think investing in your business makes a lot of sense. And I think investing in yourself is always a good investment too, when it comes to personal growth, right? So you mentioned Tony Robbins. Like, I remember the first Tony Robbins conference I went to, I think I paid $600 and it changed my life to a certain extent. Yeah. So that's $600. That's like, going out for dinner like 5 times or something, right? I mean, that investment, no matter the economy, that's always a good investment, right?
Yeah, I mean, dude, that's a really good way of looking at it too, right? Like if you're not taking profits out of your company, you're essentially just reinvesting back into that. And I think that's something I wasn't looking at it that way. Even though that's what it is. And it's like I think that's a really good shift, especially going into the winter season of like, if you're not taking profits out of your company and you're reinvesting all of that back into what you're building, understanding what the ROI of that is. So that's a KPI that we got to start tracking, is like the profits that we are investing back in. What is the ROI that's coming out of that? But with that said, man, I think, like to wrap up like the big conversation here, I think, all of these are major indicators that are showing us that the market has changed. I'm really curious to see what happens with Sonder in the next 30, 90 days. And if there is any shifts to their model. And I'm really curious to see, the bigger, and when I say bigger, I'm talking like not major companies, but companies that have 50, 100, 200 master leases, what they're going to do to continue to scale that model. Or if they're going to start shifting. In my opinion, it's like get out of that, get into the management and understand how to acquire, right? Yeah. Because with the market coming up, I think in the next 12 to 24 months, there's going to be some massive opportunities in our industry to acquire quite a bit of properties, single family homes that are approved for short-term rentals, boutique hotels, all of that. So that's what I'm mostly excited about. And I'm curious to see how that works out over the next few months.
Yeah. You know what? Like I'm going to be in Europe in the summer, and I'm going to stay at a Sonder. I'm going to stay at one of their places because I see they have one building in Amsterdam, and it's pretty cheap, man. I'm looking at this right now, and it's like 112 euros a night for a bedroom, which is that's not a lot. That's pretty cheap for Amsterdam. So,
well, that was, that's a good point, man. Like that was a big part of their model going through COVID, and then also trying to take up as many properties in these downtown cities. I just read that they're in 35 markets right now. So 35 cities. They were more focused on occupancy than ADR. Right. So they were more focused on filling the units than bringing in the highest ADR. So like I remember in San Diego, they were just slashing their prices and offering, their units for $100 a night, where the regular competitor was trying to get $250 a night. Right.
Mm-hmm.
So they were just trying to get people in there to fill it, because empty units is going to hurt their pitch at the end of the day. Right. Yeah. Versus the ADR, because they can say, well, then we can increase the ADR because we have so much demand in our properties. Right. But what they're doing is they're actually slashing their prices and undercutting the entire market.
Yeah. I mean, I guess the whole idea is just with, remember in the late 90s with internet companies, like it didn't matter if you made a profit, pets.com, you just want to show that you have like your user base is growing. And that's what investors wanted to see to invest money, right? So, yeah, I mean, it makes sense. If you raise like $500 million, then you can, you have that luxury of like you don't need to make a profit, right? For at least for the foreseeable time frame. I mean, I think Amazon like didn't make a profit for the first like 10 or 15 years that they were in business, right? So, awesome, man. Well, are you packed up for Mexico?
I'm getting there.
All right.
I'm getting there. Yeah.
All right. I'm excited to see the new shirts.
Yeah. We picked those up. Let's not announce what they say. We'll share those on social media. But yeah, we pick up our new company shirts in a few hours from now. So, but yeah, I'm pumped, man. Still got some stuff to do as far as like packing and planning the last few things for the event. But yeah, tell everybody what we're doing and what the next 10 days look like for us.
Yeah, so our first live event, post-COVID live event for the STR Legends Mastermind is happening Thursday through Monday. So you're listening to this probably on Friday. So we started yesterday. But yeah, we got about 25 companies are coming down to Oaxaca in Mexico to do our live event. We're going to be staying there at an amazing resort. Everybody who's listening, like you should check out us on Instagram, because we'll be sharing quite a bit. We're not super social media lovers, but we will be sharing like stories and some photos and everything on social media. So what's your handle again? Eric D. Muller?
Yeah, Eric D. Muller on Instagram, and I'll probably just be sharing on Instagram. And the hashtag will be STR Legends with the S.
Yes, STR Legends. Yeah. So this is our third live event. The last one we did was in Colombia in 2020, which was awesome. And right after that, COVID broke out, and we went virtual with the mastermind. But now we're back. We're back with live events, and I can't wait to meet some people in person.
Yeah, man, this one's going to be freaking powerful. We had the ability to invest in some team members, some experts, snipers, as we like to call them inside of Legends X, who are helping us really lead this event. So yeah, we rented this beautiful resort, 8 different villas on there, up in the mountains or the cliffs overlooking the ocean. And we invested pretty heavily in the experience. So that's what I'm super excited about. But yeah, we have some incredible people coming down too, people from all around the world that are just really growing some awesome short-term rental businesses. They're, investing in boutique hotels, acquiring other short-term rental companies. We have Steve Schwab from Casago coming down. He runs over 4,000 units worldwide. So we'll be able to connect with him and understand how, what he's doing to position himself to, deal with the winter that's coming. Yeah, we have some really incredible people. Brittany and Derek from My Nectar, super excited to have them down there. So yeah, this event is going to be freaking powerful. So I'm excited for it. And we also have John, who's going to be doing all the video for us and posting up a lot of social media for us. So yeah, hey guys, follow us and let us know how, let us know your thoughts about the event.
Yeah, for sure. So your Instagram, Eric D. Muller, mine is Jasper Rivers. We'll be posting up a lot. And next week we'll share what we're learning, because we're going to learn a lot. I'm really curious, because the questions that you're asking are really good questions, not so easy to answer. So I'm really excited to understand what everybody else is doing and what everybody else is planning. So yeah, we'll share all that next week on the podcast. And with that said, I think I'm going to pack my bag. I'm flying at 7:50 in the morning tomorrow, so I got an early ride to the airport. I think you go even earlier, no?
Oh man, the whole crew's coming to my house tomorrow at 4:45 a.m. We got the car picking us up at 5. We're driving all the way down to Tijuana, Mexico. We're crossing over to Tijuana and flying from Tijuana to the local airport there. So it's gonna be a long day. It's gonna be fun. We're gonna try to document the whole thing. But yeah, it's gonna be an early night for me. I'm gonna go hard at jiu-jitsu tonight, so I could just come home and crash and go to sleep. So, gonna get up at 3 a.m. It's gonna be crazy.
Oh wow. Oh, that's nuts. Cool, man. Well, let's wrap this up. I'll see you tomorrow.
All right, brother. Chat soon. Thanks, y'all.
Thanks for listening, everybody. We'll be back on Monday, and next week we'll share takeaways from our Legends Mastermind event. So see you then.